Good morning, ladies and gentlemen, and you're warmly welcome to the second edition of the Petra webinar series. We are very grateful to have you join us today to take time off your busy schedules and take part in this all-important conversation. And so thank you so much once again. So today our discussion would be centered around how we can respond to the current economic situation, how we can prep for the new year. And I have a panel here with me to have that discussion. I'm sure most of us have heard of the latest inflation numbers, and it's not particularly pleasant. It's been quite a difficult year. We faced a high increase in the prices of goods and services. We've seen significant increases in fuel prices, as well as a general economic difficulty. But even at the beginning of this year, I recall that inflation stood at 13.9%. And even then, I felt as though that was quite high and something needed to be done. But we've been able to weather the storm and get to this point, and the year is about to end. And we're trying to have this conversation with you, our viewers, our clients, our customers, to see how we can prepare for 2023, the steps we can take to ensure that we all stay financially healthy going into the new year. And so today I'm joined by two very seasoned professionals in this field. Who work with Petra. First, I have Mr. Derek Lartey. Derek is currently the head of the Business and Strategic Initiatives team at Petra. Thank you so much, Derek, for joining us today.
Thank you very much, Sonia. I'm delighted to be here. I'm expecting this conversation to be very fruitful. At the end of this, our customers and all our listeners should be more confident about 2023. Thank you.
Thank you for joining us, Derek, and we anticipate that it will be a very good discussion. I also have with me another familiar face, Mr. Stephen Sapong. He is the head of business development at Petra. Thank you, Stephen, for joining us today.
Thank you very much, Sonia, for also having me, and thanks to our audience for joining us. We are super grateful.
So before we zoom into our discussion, we expect that would spend 45 minutes to an hour having this discussion with you all. We hope that the discussion will be interactive. And so as we go along, if you have any questions, please do well to type them out in the chat section and we will address them. Also, we are recording this session and we would also place it on our YouTube channel. And so after this session, if you'd like to refer to it in future, please visit our YouTube channel. We're also broadcasting this live on our Facebook and our YouTube. So if there's anyone who cannot join this session, they can also join us on Facebook and YouTube. So let's move on into our discussion for today. So, Derek, is there a reason why we're having these discussions? Are these discussions necessary? Why are we all talking about the economy today?
Thank you, Sonia. It's very reasonable and understandable that people are concerned, people are worried about what's happening in the markets because of the fluctuations that we've seen. Like you said earlier on, the numbers we are looking at today are far higher than what we expected at the beginning of the year. Inflation has gone up to about 50%. Even fuel prices, which have started coming down recently, skyrocketed a month or two ago. So people should be concerned. We've also heard about what's happening with the offer from the government, from the Ministry of Finance or the debt exchange program. But like we said last week, we at Petra will continue to engage the Ministry of Finance, continue to engage directly and even through the Chamber of Trustees to make sure that we negotiate this offer, because it's still an offer, and we are hoping to get a better offer that would serve the interest of our cherished customers and clients. Also, what we said last week, that we are taking proactive steps to minimize the potential impact of this offer in case it happens or if it becomes active. The last thing I would like to say is that we are going to continue to make sure that we are very transparent. We continue to share information as and when things change within the market. So please keep following us, keep listening to us, and be well informed. Thank you, Sonia.
Thank you very much, Derek. Okay. So considering all that you've said, how are individuals to position themselves? How are businesses to position themselves in these times in order to maintain their financial health going into 2023, Stephen?
Thank you very much, Sonia, for the question. And I think I would like to associate myself with all that Caleb said. We are all concerned because one way or the other, we have our monies in it, including myself who is talking. And so we understand the confusion and the plight of the customers and individuals out there and all the confusion in their minds. We hope that by the end of this discussion, we'll be able to address some of the begging questions on their minds, and we will sort of have a smooth journey in this journey of investment. And so how do companies and individuals position themselves in these difficult times? It is often said that we are not in normal times. And once we are not in normal times, definitely we can't continue to do the normal things that we used to do. And so it is time to rethink, relook at some of our decisions we made in the past and decisions we are making as to whether it will help to take us to the destination that we are supposed to get to, looking at all that is happening. So the questions were in twofold: businesses and individuals. So for the part of businesses, there are certain key things that any company today should be looking at. The first thing is every company today should, because of what is happening, in fact, the dollar rate today, we don't know whether it's going or it's coming, but one thing is clear, it's coming down. Cost of doing business is also going up and all of that. So businesses need to streamline their operations, i.e. make sure businesses are reducing costs as much as possible. Anything that you can use to can put in place to reduce costs, this is the time to look at things. So businesses have to sit down and rethink about their expenditure budget to see the things that they can let go and the not so essential things that they can either reduce or let go entirely. And so that is one way companies can look at how to embrace themselves in these difficult times. The other thing companies and institutions can also take advantage of is said that in the midst of trouble, there are opportunities. And so this is the time companies will have to also look at other streams of revenue or income. And so if you are used to one way of generating your revenue, probably this is the time to also relook at our decisions to see what you can put in place to bring about new revenue lines. And in that way, it helps to put the profitability of the company in a good position. So companies will have to relook at coming up with new revenue lines, i.e. introducing new products or services to meet the needs of customers and individuals at this point in time. So that's one thing companies will also have to do, just to make sure that they are in the right position or they are healthy to continue on business. So these two key things are critical for organizations. And once it's been done and done well, it will take us to the next level. And lastly, I also expect that this is the time companies and institutions will sort of engage their clients or customers better, to understand their needs and to help them any way that you can help them to put them at rest in terms of all that is happening or meeting their needs is also important. So trying to understand your customers better, engaging them better, so that if they have to make any decision, it will be an informed one. And so on the part of the business, probably these are some of the things that I can share to put businesses in the right path. And on individuals, so let me try and address on the individuals briefly. So on the part of the individuals yes, companies are rethinking and relooking at their decisions. I guess individuals will also have to take such decisions. If companies are looking at streamlining their operations and reducing costs, what it simply means is that what will also come to the individual may one way or the other reduce. And so we also have to make sure that we are looking at our budgets and looking at our spending as individuals. If you look at what is happening in the market today, price of fuel has almost doubled. Yes, it's coming down, but it is not where it used to be. So what it simply means is that the cost of even buying fuel has increased. Cost of buying household items have all gone up. So if in the past you used to spend 1,000 cedis on household items and fuel in a week. Today, you are spending over 2K for the same things. Your income may have been stable or slightly increased, but if you don't look at your expenditure, you will get to a point whereby it will be difficult for you to, continue, and you may have to fall on other things that you shouldn't necessarily also fall on. And so that's one thing that individuals also have to look out for. And if there's a need for any individual to also access a loan, always make sure that you are looking out for fixed term rate. So variable rate at this time may not be of interest to you because the indicators are always going up. And so if you can negotiate well to get a fixed rate for your loans, that's if there's a need for it, and the keyword here is need. You can also look at that. And for families, I expect that this is the time that they will come together. So if you're married, if you're children, what have you, this is the time to come together and think about the things that you need to spend or buy for Christmas and the new and the new year and all of that. Families will have to sit down to plan on the key things that they need to do and what they can also avoid. So the key word here is that we need to spend on essential commodities because we are not in normal times. Thank you.
Thank you so much, Stephen. That was quite enlightening. And I like where you left off. Planning is essential in these times. We cannot just go out, for example, and say we're grocery shopping without planning out what we're going to buy. Or we can't just step out and say, I'm going to this place without planning a route that will reduce the amount of fuel that we are going to spend on those journeys. In planning these things out, what are some of the factors that we need to consider, Derek?
Thank you very much, Sonia. Yes, I agree with everything Stephen said. Yes, it's very important to plan. And when you're looking to invest your funds, what you should consider is first what the objective for investment is. Why are you putting this money away? I mean, what are the objectives? What do you want to achieve? With this investment opportunity or with investment security? It's very important to focus on that objective because, like we've seen in recent times, the performance of these investments temporarily dip, right? And so you would like to have a target and then work towards that target. So have a good target and another thing that's very, very important is to be well informed. To be very well informed, and to do that, you need to, if you don't have the expertise, you don't have the investment expertise, you don't really understand some of these things, talk to a professional, speak to the guys who have been doing it for a long time. Petra has been here for about 10 years. The guys who have been with us over the last 10 years have seen, I've seen that we've survived all the temporary blips that happened in the market. The banking sector happened, the savings and loans restructuring happened, all sorts of, shocks in the market, but we are still here. Because we have the expertise, because we've been able to analyze anytime some of these things happen, take the best decisions for our customers and for our clients. So be well informed, talk to the right people, don't follow rumors and don't react to what's happening in the market. That's very, very important. The last thing I would say is to try and diversify your investments. You shouldn't put all your eggs in one basket, like the old saying goes, but not diversification for diversification's sake. That's why you speak to a financial advisor or a professional. Try and make sure that you find different assets or different options for your savings or for your monies, and that should get you to achieve your goal. Thank you.
Thank you so much, Derek. Speaking of making those diversifications, what kinds of assets are we considering? We know that the government securities ordinarily are the safest option. Considering all that is going on today, as a business, what do I do if I have excess funds that I am looking to put somewhere? Do I invest in more hard assets or I go the other way?
I don't know if I can come in there, probably. Okay, so I think in all of this, what we need, and I think Caleb tried to touch on it, we need investment advice. In times like this, sometimes when you take the decision to our own hands, we may be taking some panic reactions. and panic decisions. Today, I see a lot of people redeeming their funds because of ABC factors. I had friends that decided to invest in dollar when the dollar was going up. So they bought it around 14 cedis. Today, the dollar has come down and they are crying because they took a decision purely based on market speculation, and today they find themselves wanting. And so, in as much as we have the right to make our decisions, let's always make sure we are talking to the right partners. At Petra, we have a team of advisors who will help you to make all of these financial decisions, help you to shape and reshape your financial goals. There are other investment advice institutions that we also deal with. We have Abna on the call. I'm sure at the right time she will talk to you about what they also bring on board to help to position individuals who are in this situation. And so let's just make sure we have the right information, but we are not just reacting based on market information or information out there. We may get it wrong. At this point, Derek to talk about getting the right information, but I will want to instate that the information should be coming from either reliable source like BOG, Bank of Ghana, Securities and Exchange Commission, National Pensions Regulatory Authority, or any of the reliable and recognized government agencies. If you decide to just pick information on social media and act on it, in the long run, it may not be of your interest. And so my advice is whatever you have, whatever you want to do, talk to an advisor, because we may all have different needs. And so if I sit here and say that, okay, if you have X amount, go and do this, go and do that, it may not really set sort of answer your need. It's like a doctor who is on air trying to talk to people about health issues and all that. Because we have unique, issues when it comes to health matters. You don't just give a blanket solution that will cover all. Sometimes you give that solution, somebody may go and take it, and the end results may not be the best. So I would say that talk to the right investment advisor or professionals when you have to make any investment decisions. Don't think about the quantum of funds that you have, because for organizations like Petra, we don't really look at how much you are bringing on board. But our goal or our objective is to make sure that we are assisting you to make the right decision. Because if today we can guide you to put aside 100 Ghana cedis, and irrespective of the turbulence in the market, you still continue to be with us. When you have 10,000 or 100,000, you know where to send it, because we have given you the right information. So first of all, helping you to build the right attitude towards the investment is key, and it's something that we do on daily basis. So talk to your the right investment advisor, and will help you to make the right decisions. If you are a Petra client or a customer, feel free to engage any of our relationship managers or customer service reps. If it is difficult to reach out to any of these individuals, when you come to Petra, please ask of Stephen. I'll be ever ready to help you, and just to make sure that we are guiding you to make the right decisions at any point in time. Thank you. Sonia, Philip, I don't know whether you want to add on to it.
Maybe the little I'll add is today there are lots of things going on. This also creates an opportunity for individuals who have some funds to spare. This is the best time to actually invest because prices are quite low. But just don't invest. Talk to, like Steven said, talk to the right people. Talk to the right people, and then you'll be advised and you'll be guided to where to put your monies. Thank you.
Okay. Thank you so much, Stephen and Derek. Abna, you're welcome. Abna is a seasoned investment analyst with the IC Wealth Management Desk, and she's here to add on to our conversation and make it richer. Thank you so much for joining us, Abna.
Thank you very much for having me.
Right.
I hope you.
So, great, thank you, Abna. So a quick reminder, if you have any questions as we go along, please do well to drop them in the chat section and we'll do well to address them. Also, we have shared a quick questionnaire, and so would encourage all our viewers to fill out the questionnaire, and we can proceed to address your questions. Okay, so Abna, thank you so much for joining us again. Is there any practical advice you have for investors in this time concerning their portfolios? What can they do? Should they stay invested? Should they exit their positions? What can investors do practically in going into 2023, considering their investment portfolios?
All right, thank you very much for the question. I would say do not stop investing. Do not try to rush out of the market because things are not doing very well. We do have some individuals who think that they can beat the market, and so they do frequent entry and exit. But then think about it. Usually when you do that, you get yourself hit, right? So I'm going to use an example of what is happening to the cedi right now. When it depreciated to about 15 cedis to the dollar, we did have individuals purchase a lot of dollars because they thought it's going to appreciate to, let's say, 18 cedis or 20 cedis. But now the cedi has appreciated to the dollar at 9 to 10. And for these individuals, they risk losing about 5 cedis of their investment if they decide to sell off or change their dollars to cedis. So it is always best to stay invested and try to stay away from the volatility of the economy. Okay, so that's one advice that you should do. Also, pay particular attention to the products that are available and what they are investing in. You should try and understand the various securities that your financial institutions are investing in, if it is something reliable or if it is an instrument that is liquid. One thing that we've learned from this episode is that liquidity is important. You should be able to have access to your cash when you need it. So you should try and also diversify and include liquidity as part of your portfolio. All right. And then another thing I would also point out is that you shouldn't follow the bandwagon. In other words, do not follow the crowd. All right. The bandwagon effect is that everyone is doing it, so you also decide to join. Usually what happens is that if there's an investment opportunity to make money, when the chances of making that money is high, people had already entered quietly. And so by the time you get to hear about it, most of them have made money out of it. So it is important to not follow what the crowd is doing. Do not follow speculations. Always get information from the right sources. You can check out the Ministry of Finance website. You can look at the Bank of Ghana or the Securities and Exchange Commission. Those are the right credible sources. Or you can also speak to reputable institutions like Petra, as they've already been doing. They provide you with the right information. So in a nutshell, what you should do is first, please stay invested. Do not be tempted to cash out. Avoid playing the market. Always seek professional advice. I think Stephen has also mentioned that as well. And don't follow the bandwagon. So those are the few pointers I would give. Thank you.
Thank you so much, Abna. It seems as though some people come in and are following the bandwagon when they hear, okay, my balances are moving in a way that I'm not happy with, and then they want to cash out. Stephen, what's your advice to these people?
Thank you, Sonia. So cashing out in itself, I don't think it's a problem, or cashing out is wrong. It's not wrong. So cashing out simply means withdrawing your money. I think in the last 1 week, in the last week, I have answered this question like 100 times from different individuals and companies. And I think it's important to put things in perspective. As I said, the money is your money. You decided to put it aside to earn a certain income on your behalf. And so if you have to call on it at any point in time, I don't think it should be a problem. But there are 3 key questions I want you to answer, but you have to trigger that decision. The first thing is why you are taking the money. Is it because of panic reactions in the markets? People are saying your returns are coming down, or in fact you yourself, you've seen that indeed your balances are dropping, so you are going to withdraw it. So you need to ask yourself that question: why am I doing that? If it is just about that, will it be ideal to talk to somebody to understand why so? Because as individuals, the other parties, when you also see impressive gains or aggressive gains on our balances. We don't normally rush to come and say that, hey, these gains are too good to be true, and so I'm taking out my money. So then the question is, when the reverse happens, why are we doing what we are doing? So we need to be very clear why we are taking the money. It shouldn't just be based on market reactions or panic in the market, but it should be purely based on investment decisions. The second one is how much you are taking, and it's very key. Today, people come when you talk to them. I was accosted by a customer of ours from a company I visited on Wednesday. He came to me, Master, I want to take all my money. And I'm like, I want to take my money. I'm like, how much? He said, I asked, he told me everything. I said, how much is your balance? I want to do everything. The danger with that is, yes, you are entitled to take that, as I mentioned earlier. But if you are taking everything and don't have a need for it, you may end up using those monies for consumables, and consumables we all know does not last. And so that again wouldn't be a prudent decision to take, because whenever you have investments or you have monies in your savings or emergency accounts or funds, and you want to take some or all, you should know how much exactly you want to take. Else, the money will be taken and it may not be used for the intended purpose, because either you have too much cash or less cash on you, which will not be able to meet whatever it is that you wanted to do, and so it may not serve its purpose. So you need to also know how much you want to take. It is very key. And then lastly, what you are using the money for, because you cannot just tell me that you are taking money and you don't know what you are using it for. Again, there will be so many things out there that will force you to use the money on. And the question is, in the next 3-6 months, will you really look back and say that you made the right decision? Maybe around that time, things would have been stable, and the market would have taken the right shape, and then we'll be seeing returns on the ascendancy. And so at that point, what happens? The money that you took may not be available. You may have used it on consumables, and even if you took it, bringing it back, as Caleb said, you may come in at a time when prices are high, and so you may not get the gains that you expected to gain over the period. And so these 3 key questions should be answered whenever you want to take your money. I wouldn't say that, no, don't take your money, but you need to do a very deep introspection to see that why I'm taking the money, what I'm using the money for, and what is triggering that action for me to take my money. If you are able to answer all these questions in a professional way, then you can make a decision. But I wouldn't just sit down, tell you that because your returns are dropping, just take your money. No, returns coming down or going up is a common feature with the kind of investments we do here, and most mutual funds out there. And so times like this, it's not really new to us, because if you've also been with us or you've been in an mutual fund scheme before, you realize that there are bad times and good times. And so we will surely, get over these things. And I encourage and encourage individuals in here that if for any reason you have to withdraw your money, please again talk to any of your advisors or relationship managers. And if you are maybe a contact person or HR person who leads a group, who represent a group of people in an organization, also make sure that these 3 questions are answered. Today, we have a lot of companies reaching out to that, their 10-year window for the tier 3 is up, and so they want to redeem. But the question is, how much do they want to redeem? What are they using it for? Is it because it's available, so they should come and take it? Is it because it's Christmas, so they should come and take the money and just go and burn the cash? Well, if that is the response, that's fine. But over time, first quarter, second quarter next year, the same employees may come to you and say that we are cash strapped. We need other things. When it happens, then fair enough. We may have other products to help you, scale. But my question to you is that make sure these 3 questions, my advice to you is that make sure these 3 questions are answered, and then when you are comfortable with the response, we can all proceed. So please do not take hasty decisions or information in the market to just go and redeem your money from any investment fund that you have your funds in, because of just the information out there. But talk to somebody. As I said, if you engage anybody in Petra, being it a client or a prospect who have joined us for this conversation, feel free to engage us for a conversation, and it will help you to make the right decisions. This is not to say that I will never tell you not to take your money. I recently told the customer that after engaging the customer, I realized the customer was using the money to go and acquire a fixed asset, which is a land. And I was like, this is great. You can go ahead. And so we just made sure that the land was litigation free and all of that. And so the decision was made, and he took the right amount, not all. And so there will be times when we will advise you to take your money. But all that I'm saying is that let's make sure we're making the right decision at any point in time. Thank you very much, Sonia.
Thank you so much, Stephen. However, Derek, I see that I drew up a plan. I needed to have a certain amount at a certain time in order to meet a certain goal. But the current situation is not making my plan go in the way that I expected it to. And so what do I do at this point?
Thank you very much, Sonia. So if I understand your questions, you have a plan, and based on what's happening today, you don't think we are going to achieve the plan because of the market. What if you have your plan with Petra, or if you have a plan with a good investment firm, what we'll do is we will take the decision based on what's happening today to diversify your assets or your investment in such a way that when market turns around, you'll be able to catch up as much as possible so that you can recover and then achieve your target. This is very, I mean, it's not easy to do, on your own. And that's why we have technical people, we have professionals in-house to be able to study the market, take the right decisions, and then ensure that you can recover in time to achieve your target. The reason why this is important is that when you are managing your funds yourself, you would be forced, or you would be tempted to take out your money today because you think you are saving what you have left. But when you do that, you're actually crystallizing your losses. That means that you're actually accepting the fact that you've lost money. If you keep your funds in the investments, or you keep your funds in the plan that you've committed to, what we expect, what we've seen in the past 10 years and in all our experiences, that the market will recover. But if the market recovers and you are nowhere, or your funds are not in the fund, then you can't enjoy those benefits. So it's important to stick to the plan. It's important. You can ask questions, ask your advisors, ask your portfolio manager, whoever is managing your funds, why this is happening, and what are you doing to ensure that I'm able to recover and in good time to go to achieve my plan. Another thing is there may be other options. There may be new options, there may be other products that would better help you to achieve your plan in light of what's going on. So when you speak to the right people, when you speak to Petra, for example, we'll be able to tell you what you can do to meet maybe some emergency needs, some short-term needs that have come up. These are certain facilities you can get based on your investments with us, and then we can help you, meet those obligations. So just speak to the right person, don't react, commit yourself and stick to the plan. And I believe 90% of the time you'll be able to achieve your goals. Thank you.
Thank you so much, Derek. But considering all that is happening, what really is the benefit of staying invested, Abna? Today, if I have a certain amount in my account and I see that the balances are falling, is there any benefit? Is there any need for me to continue doing this? Because most of people invested in, say, the mutual funds have noticed that, okay, some of our balances are falling. Some pension schemes may have similar situations. What is the benefit for staying invested?
All right, thank you very much. So most of the times we invest for long terms because probably we have an objective that we seek to achieve in the next 5 to 10 years, right? Now, what is currently happening in the market is short term. And looking at the government intervention and hopefully an agreement that we can have with the IMF, we should expect to see some positive reactions or changes in the economy. And so right now, you might think that your investment is not growing. But in a fluctuating economy like this, it's very much important to think about capital preservation than growing your capital. Okay. And so, for instance, you can keep your money in mutual funds if you want to diversify or go into other investments. We've been told that T-bills are exempted from the debt restructuring. You can consider T-bills as well, so that you can at least preserve your capital and sit back, monitor what is happening, and do not panic as well. As I mentioned, investment is long term. So hopefully by the end of, let's say, 2023, we should see most of our economic indicators performing very well. Interest rates going down, which would help the bond prices on the mutual funds also going up. So in a nutshell, don't be discouraged. Always think long term. Prices always fluctuate in the market. It would, at a point, it will go down, at a point, it will come up. And so let's just sit back and hopefully the economy will stabilize, and then we'll start seeing some appreciation in our investment. Thank you.
Thank you so much, Adna. So at this point, we'll switch over to some of the questions that we received in our chat section in order to address them. So a few of them tie in. Derek, if you can assist to throw some light on why the balances of the customers are falling around this time, and if there's any assurance that their investments are safe and they can be withdrawn as and when necessary.
Thank you very much, Tonia. I'll take the last part first. Yes, your investments are very safe with us. Your investments have been safe with us for the last 10 years, and that hasn't changed. Petra continues to ensure that we work with our fund managers to provide the best advice to the fund managers to provide the best return, best performance for our customers and our clients. So yes, the investments are safe and they are going to continue to be safe. The reason why we are seeing some reduction in our balances in the last few days, the last few weeks, is basically exposure to the dollar. Like Yvonne mentioned last week, we allocated some of our funds to dollar-denominated assets, and so we are exposed to the exchange rate. And so when the CD appreciates against the dollar, like we've seen in the last few days, significantly, we expect to see a drop in our balances. But this is not new. This is not new at all. This has happened 3 years ago, 5 years ago. I mean, those of us who have stayed with us for a long time have seen this before. And what we've seen is that in all those cases, in all those situations, those dips or those appreciations against the dollar do not last. I mean, it will take some time, but we expect, the reason why we are still holding those dollar exposures is that we expect things to stabilize soon. And like we've seen in the past, our monies will recover and our customers will be happy again. What I want to encourage everyone, especially for those of us who have been with us for some time, there are rumors out there. Help a friend who doesn't understand this, who may be new to this. Let the person understand that, look back, I can show you my balances for the last 5 years, 6 years. When you look at it for longer periods, you see a gradual increase in your balances. It's when you zoom in into the specific period, maybe for 2 days, for 1 week, for 1 month, you see some dips. So it's important to look at it for longer periods. Look at it for how long you are keeping the money for, and don't react to the sudden dip in your balances. We will recover and your monies are safe. Thank you.
All right, so it seems as though we should be looking at the bigger picture rather than looking at the individual events that make up that bigger picture. All right, so I see that you're discussing voluntary investments. Mine or ours is mandatory second tier. I have no option but to keep contributing. Stephen, what is your response to such a comment?
So thank you very much, Sonia, for that. I'm glad you are interested in the mandatory contributions, because I have some friends and some customers who say that they've given up on that, and the ones that they can take control over and redeem, they are redeeming. Those decisions after engaging people or individuals sort of rethink that and have a positive mindset about how we do things. So yes, the tier 2 contributions are actually mandatory, and you can't really access it today unless you are going on retirement or other conditions as stipulated in the Pensions Act. And so really you can't really take it, but what we can tell you and what most the panel members have said, i.e. Derek and Abner, they've sort of given us assurance as to what is happening and performance in the past, and the fact that this will not continue forever. It will actually, there will be a turnaround for us to get the needed benefit that comes with it. And so in as much as you can't take your tier 2 my advice to you is make sure your company continues to make the contribution. Aside the fact that there may be regulatory issues with GRA when those payments are not made, and even NPRA, I will tell you that don't even just look at the regulatory side, but as a person, be interested that those monies are paid. Because as Derek rightly said, this is the best time to have your money being invested, and it's straightforward. The schemes we run are unitized, and so everybody owns a certain unit in the scheme. So when prices are low, it means you can have more units, even though your balances are dropping because of the fluctuations in the market. But you're having more units overnight. If a price is say 1 cedi and you have 100 units. What it means that you have 100 Ghana cedis in your portfolio as in your total value. If overnight the price is increased to 2 cedis because things are taking shape, like what is happening to the dollar, then what will happen is that your balance will move from 100 Ghana cedis to 200 Ghana. If you are now coming in, you are coming in with just the 100 cedis. And now you have to wait for it to grow. And if at the time you are coming in, the price is 2 cedis per unit, you wouldn't be getting 100 units. You will get less because your 100 cedis can buy less units because of the price of it. And so I will encourage you that insist your company makes those contributions, and knowing very well that this conversation and other conversations that we've been having is sort of putting things in the right perspective. I also expect that your voluntary contributions will continue to come, and probably sit back and do a reassessment of your investment plans or goals, just to make sure that where you are putting your funds and which asset classes or security you are putting the funds in, just to make sure that at the end of the day you are getting the best out of the situation. Abner rightly said that treasury bills are exempted from all of this, debt restriction or stability that the government is talking about. And so if you talk to the right advisor, if you talk to the right institution, talk to the right person, you will get you'll be introduced to the right products and what have you, just to make sure that you are taking the right decisions. And so let the contribution come in, reassess your investments or goals or objectives, as in once the year is coming to an end, we are starting a new year. This is the time to also look at your investment goals again, looking at what is happening in the market, and then based on that, you can make informed decisions. And at the end of the day, we will all see light at the end of the tunnel. So please, if you are listening to us and you are contemplating engaging your employer to stop making tier 2 contributions, and it's telling them that, okay, you keep it. When things stabilize, then you bring it, you will be at a loss. Secondly, if you have a voluntary contribution, and because of this, the union members or stakeholders in organizations are engaging the employer or employer to desist from making voluntary contributions to, I'm saying that you also be at a loss, because when the time is right and you come in, it will be at a loss to you, because you come in when prices are high and you get less units, and it will affect your total balance. So let's continue to let the contributions come back. Then let's engage. Sometimes when you engage the advisors, we'll be able to help you to reposition and realign your investment goals, just to make sure that you are getting the best out of it. Sonia, so that, I think that should help. Thank you very much.
Thank you so much, Stephen. Derek, is there anything else you'd like to add to Stephen's submission?
Yes, I think I want to bring it down, make it more realistic. And a particular example is when a week or two ago, one of our customers walked in and said that they had a mortgage, or they had a property they would like to access to a mortgage. And the only reason she could be able to have that conversation was, one, that her tier 3 balance was adequate and could give her the opportunity to access that property to a mortgage at a very, very affordable rate. This, is very, very in line with what Stephen is saying. If your employers, if she, in her personal pensions investment, decided to react towards what happened 5 years ago or 3 years ago and withdraw her money, or decided to take some of her money, or stop investing, or stop making the monthly contributions, she wouldn't have been in the position she is in today to be able to acquire that property. So it's very, very important. Don't react to this. Don't say because your monies are going down, you're going to take out or withdraw your funds. The more you leave there, you stay invested, your ability to compound your benefits or your interest, is stronger. So please stay invested. There are other, examples I can give, but I won't take too much of our time. Let's stay invested and it will benefit us in long term. Thank you.
Thank you so much, Derek. So for those with questions specific to the accounts with Petra, we would address those questions through our customer service desk. So they would reach out to you and ensure that your questions specific to your accounts are addressed. Please, for those who also want to revisit our previous conversations, the link, the video has been posted to our YouTube channel, and so you can visit there to have an in-depth understanding of what is happening in the economy and why we are all concerned. The survey link has also been reshared in the Q&A section so that we can take the survey and give us some feedback on how this session has gone. So for Abna, is there any information that you can give us concerning the investing space right now? Are there any credible sources of information that investors can look to make those investments decisions, aside speaking to an investment professional, because not everybody has the opportunity to do so? What other credible sources of information are available to us?
All right, thank you very much. So yes, there are credible sources available. The first one you could look at is the Ministry of Finance. Once you go onto their website, they do have various information concerning the various programs. There's an FAQ that breaks down the questions and the answers to some of the things that you don't understand. You can also check the Bank of Ghana website for information concerning the currency. In terms of your investments, you can check the Securities and Exchange Commission as well. You can also consider credible news outlets. So we do have some news outlets that provide good information to individuals or customers. So you can look at that. You can also rely on newspapers. And then if you don't have a financial advisor, you can always walk into Petra's office, or you can come to IC. We would always assist you. You can call us, send us an email, or walk to our office. We would be very happy to assist you and answer all the questions that you have. So those are the various outlets you can explore if you're looking for answers and you don't have a financial advisor. Thank you.
Thank you so much, Abna. And I see that someone would like to know more about the Tier 3 pension option that Petra has. So if, Stephen, you could shed more light on that.
Thank you very much. Before I do, let me add on to what Abna said. In these times we find ourselves in, especially if you have association with Petra, you can't afford not to have an advisor. You can't afford not to get information. And so please, if you're a Petra customer, no matter where you are in the country, feel free to reach out, either to our customer service team, and you come to the company. So in fact, up to the MD level, we are ready to assist. My MD today, that is not an armchair executive. He's always on the move just to make sure that we are giving the right information to people. So today, as we speak, he texted me around 8-something that he was going to meet a certain group of executives just to explain some things to them. And so everybody here is concerned. And so if you're a customer or a client, you can't afford not to have an advisor. And so please, I wasn't happy when Sonia said if you don't have an advisor, please do get one. Come to Petra, go to IC or any reputable investment firm and get the right. Sometimes because you are a customer, you may feel that, oh, we are going to sugarcoat you when you come around. In the right credible investment advisors do not sugarcoat. We tell you as it is. You may think that we just want you to leave your money, and so these people are just interested in keeping money. Not at all. We will help you to make the right decisions. And if you want to get a second, view on it, you can go to our regulator, NPRA, National Pensions Regulatory Authority, their offices, and ask, maybe validate some of the things that we've told you. And then based on that, you can make informed decisions. Now, on the Tier 3 So yes, the Tier 3 is actually a provision in the Pensions Act that allows individuals to save on their taxes. So if you have Tier 3 in place, how much you put in your taxes is reduced and your investment is increased. So basically, it is a way that allows you to save more and reduces your monthly income. You can do that through your employer. So companies have historically what we used to call provident funds. Today, those provident funds have been converted into a Tier 3 or are being converted into a Tier 3 to take advantage of the tax savings in the law. Where if you're in an organization where the company is not ready to also do it due to different reasons, the individual can take it upon him or herself. So you can engage Petra, and through the HR, we can have the deduction being done for you from source. It is simple. It is done. Whether you are on government payroll or you are in the private sector, the law allows that all employees in Ghana. I know there are some experts who are taking advantage of it. How much more we look out? So we should all take advantage of the Tier 3, being it from the company's perspective or the individual's perspective. As I said, it's a way that it will reduce your income tax and increase your investment amount. So let's take advantage of it. You can save up to 16.5% of your income tax just on the Tier 3. So you can do some mental calculations right now. If you know how much you pay in your taxes month on month, once you have a Tier 3, that amount will be reduced by 16.5%. And so please, I will encourage you to have one. If you don't, when you come to Petra, we will assist you and guide you on the right decision to make with respect to having a Tier 3 in place, whether from the institutional point of view or the individual side. If you are even self-employed, you are not left out. There is personal pension for you, and you can also take advantage of that and plan your retirement benefits so we can change the narrative about how pensions are viewed in the country. Thank you very much, Senator.
Thank you so much, Stephen. Viewers, thank you so much for your questions. Please keep them coming in. We'd like to address one last question, and then everything else we would definitely get back to, especially through our customer service desk. So some of our viewers have questions about those with short-term investment horizons, Abner. They're about to go on retirement, or their investment goals are for the short term. What can these people do to survive these the economic turbulence we are currently facing?
Okay, Sonia, if I got your question right, individuals who are looking to invest short term, what can they do?
Yeah, so their investment goals are short term.
Okay. Okay, so if your investment goals are short term, I would advise you to look for investments that are liquid. Usually short-term investments are more liquid. So you can look at T-bills, as I've mentioned earlier on. You can also explore other collective investment schemes that are currently not exposed to Government of Ghana bonds. Or yes, you can also explore those ones. Those are usually short-term investments, so that at least you'll be able to preserve your capital in the short run, than having to explore long-term investments like stocks, bonds, as well. So that would be my simple answer to that question. Thank you.
Yeah, please let me try and bring it home. So short term, I mean, once you it's Petra doing it, we can't end this conversation without introducing you to our Achieve app. It is a way that you can put money aside and get it whenever you need it. In fact, Abner is here, but let me say this: it is the only mutual fund in Ghana today whereby you can have your money at a go instantly. You put in your request, you click on the instant button, you receive the alert. And so if you need something short term, that's the place that I will advise you look at. There's also the Eurobond and the Sentinel product out there that you can also read more to see what you can do about it. And again, when you talk to Petra, we will assist you. Like Treasury Bill, for instance, you ask yourself, should I go to CSD to get registered before I can buy it, or I should go to Bank of Ghana to buy? You don't have to do all of that. Talk to Petra. we will engage you and help you to make the right decision. If there's a need to also walk up to IC, they will also assist you to make the right decisions on all of these things. We make it very seamless and simple, just to make sure that you'll be able to put money aside and focus on the key things, and knowing very well that you are getting the needed returns or the right investment decisions are being made on your behalf. And so take advantage of our Achieve app and other product that Petra offers in the short term, just to make sure that you are getting the gains out of it. Thank you very much.
Thank you so much, Stephen. We're grateful for your interjection. So we're about to round up for this session. We're very grateful for your time. However, we're encouraging everyone to please take a few minutes to complete the survey that we shared in the chat to ensure that you provide feedback on this session, how we can make it better for you next time. So it's been such a wonderful time. I've learned a lot, and I've been encouraged to continue on the course that we have planned for ourselves, especially in terms of our investments. I have learned 3 key things, and I would like to share them with all of us as a sort of roundup of this entire discussion. So first, we're not in normal times, and so we have to do different things. We have to be more innovative in the way we raise funds, in the way we spend our funds, to ensure that we remain financially healthy. Also, we have to get the right information before making any financial decisions so that we do not regret what we choose to do in moments of turbulence. And lastly, we have to spend less. We're about to enter the Christmas festivities. There are lots and lots of events. There's lots of stuff you can do. But really, is it necessary? Will it bring you the financial help you are looking forward to in 2023? If not, let's find an alternative thing to do that would cost us less. I'm sure we've all learned this and even more from our discussion. And trust me, this is not the last in our series of webinars. There will be more. And so I encourage everyone to watch out for our announcements and then join the next one to learn more than what we discussed today. Also, this webinar has been recorded and it will be shared on our YouTube channel. So to refer to it in future, please visit our YouTube channel and then you can refresh your mind on all that we've discussed today. We're so grateful for our panel. They've taken time out of their busy schedules to come and discuss with us all these pertinent issues. And we're so grateful for your time. We're grateful for your expertise. And we hope that next time when we call on you, you'll come here again. Viewers, we're so grateful that you joined us as well. Thank you so much. We appreciate your time. We appreciate your engagement. And we're calling on you to join us next time on our series. Thank you so much and have a wonderful day.
Okay.